You know, when most people think about trading, they think it's all about charts and news and finding that one perfect magic system. But what if the biggest obstacle, the most dangerous part of the whole game, isn't in the market at all? What if it's the person staring back at you from the mirror? So let's dive right in. We're going to explore the incredible work of Dr. Alexander Elder, a psychiatrist who became a trader, to understand why trading is first and foremost a war fought inside your own head.
To really get where he's coming from on market psychology, you first have to understand the man himself. Picture this. It's 1974. Alexander Elder is a 23-year-old psychiatrist on a Soviet ship. He makes a break for it in Africa, sprints to the U.S. Embassy, and somehow finds himself landing in New York City with practically nothing. He just escaped one of the most oppressive regimes on Earth and finally won his freedom. But here's the crazy part. After escaping one seriously hostile environment, what does he do? He jumps headfirst into another one. He discovers the stock market. And you can see the appeal, right? The idea that you can make money just by thinking. He thought this was it, the ultimate expression of freedom. But he learned pretty fast that this new arena was, and I'm quoting him here, the most dangerous human endeavor short of war. Wow.
So you gotta ask, how on earth does a psychiatrist from the Soviet Union even end up becoming a legend in the financial markets? I mean, that's not exactly a typical career path, right? His journey from medicine to Wall Street is as wild as it is fascinating.
Well, it all kicked off just a couple years after he landed in the US. He's on a classic American road trip, and he grabs a paperback copy of How to Buy Stocks. And bam! He was totally hooked. So he heads back to New York. He's still doing a psychiatric residency, but now he's got this new obsession. He buys his first stock, KinderCare of all things. And just like that, he starts living this incredible double life. By day, a doctor of the human mind. By night, a student of the market's total madness.
And this is what really brings us to the heart of what Dr. Elder was trying to figure out. I mean, trading looks so appealing, right? It promises all this freedom, all this money. So why do the vast majority of people who try it just lose?
We all kind of think of the market like a poker game. If I win $100, you lose $100. Simple. A zero-sum game. It feels like a fair fight. But that's a total illusion, and it's an illusion that the industry loves for you to believe. The truth is way tougher. The market is not a zero-sum game. It's what's called a minus-sum game. Think of it like a casino. The house, in this case the brokers and exchanges, always gets its cut. And they get it through things like commissions on every single trade and this sneaky little thing called slippage. You know, that frustrating gap between the price you thought you were getting and the price you actually got.
Okay, so let's look at this. In a perfect zero-sum world, the winner's profit is exactly what the loser loses. Fair and square. But that's not reality. In the real world, the minus-sum game, because of all those costs we just talked about, the loser actually loses more money than the winner makes. So where does that extra cash go? Poof! It goes to the house. The game is literally designed so that the odds are stacked against you from the very beginning.
But here's the thing. As bad as those odds are, that's not even the main reason most traders fail. The real problem is us. It's internal. And Dr. Elder has this absolutely perfect analogy for it. He says knowing what to do is completely different from actually doing it, right? We all know we should eat a salad, but man, that slice of chocolate cake, in the moment, it's just so much more tempting.
And that is exactly what happens in trading. Traders say, oh, I want to be successful long term, but then they just can't resist making that impulsive trade, chasing that quick dopamine hit of a gamble. They completely sabotage their own future for a tiny bit of excitement right now. So here's the punchline. The biggest enemy you have in the market isn't some other trader. It's the person staring back at you in the mirror.
So this internal weakness, this craving for a shortcut, it makes traders super vulnerable. It makes them easy targets for all kinds of myths that promise instant riches without any of the hard work.
And the first big one is the myth of the black box, the magic automated trading system. Oh man, the sales pitch is so good, isn't it? Just pay us a few grand, install our software, and our robot will make you rich while you sleep. But come on, let's be real. As Elder says, the only people getting rich off these things are the guys selling them. Think about it. If you had a machine that printed money, would you sell it? No way. You'd be on a private island somewhere, not writing ad copy.
All right, myth number 2, the all-knowing charismatic guru.
You know the type, the person who claims they finally cracked the code of the market. And there's maybe no better example of this than the legendary Joe Granville, who came up with this famous line about trading volume.
See, Granville wasn't your typical boring analyst. This guy was a total showman. He'd go on tour, pack these huge auditoriums, play the piano, sing songs. I mean, he even dropped his pants on stage once. He was building a cult of personality, and for a while, man, it worked. He got so big that one sell call from him could actually tank the Dow.
So he was on top of the world. But then, 1982 happened. The market just took off like a rocket, a massive bull run. And Granville, he just dug in his heels. He stayed bearish. He kept telling his followers, sell, sell, short the market, all while it was doubling in price. He got completely wiped out, and he took all his loyal followers down with him. And the lesson here is so important. Gurus look like geniuses when the market is doing what they predicted. But markets change. They always do. And a guru who can't change with it isn't just wrong, they're dangerous.
Okay, so if the black boxes are junk and the gurus are a trap, then what the heck are you supposed to do? Well, according to Dr. Elder, real success isn't about some secret formula. It's about building a solid foundation with 3 key parts.
He has this great analogy for it, the three-legged stool. Leg number 1 is psychology. You have to master your own mind, your fear, your greed, all of it. Leg number 2 is your method, your actual trading system, a logical set of rules for when you get in and when you get out. And leg number 3, which is so often ignored, is money management, a rock-solid plan for how much you risk on any given trade so that one bad run doesn't blow up your whole account.
And listen, if you take away only one thing, let it be this. Almost every amateur trader focuses only on leg number 2. They spend all their time searching for that perfect system. But here's the truth. Without the other 2 legs, psychology and money management, the best system on planet Earth is completely worthless. Kick out any one of those legs and the whole stool comes crashing down, and your account balance goes right down with it.
So all of this, it brings us right back to where we started. It forces us to ask a really important question. What does it actually mean to be a trader?
And let's be clear, this isn't just him being dramatic. This is a guy who literally escaped the KGB. He knows what danger is. He chose those words for a reason. The market is a battlefield. Every single day, your financial and your psychological survival are at stake. It's not a hobby, it demands a professional mindset.
Because the market, it's not your friend, it's not your mother, it couldn't care less about your hopes or your dreams or the fact that you have bills to pay. It is a cold, hard, adversarial place, and it's filled with really smart people who are trying to take your money. That's the game. The market will never coddle you. It will find every single one of your weaknesses and exploit them.
And that's why, at the end of the day, becoming a successful trader has almost nothing to do with outsmarting the market. It's all about conquering yourself, your impulses, your emotions, your lack of discipline. Learning the charts, that's the easy part, believe it or not. The real work, that happens inside. So the ultimate question isn't, can you beat the market? The real question is, can you beat yourself?